Hey, what is up? Welcome back to the channel. Today we are breaking down the world's largest financial market, Forex. So it is my first video. So let's start it. Your simple step-by-step guide to understanding the world's biggest financial market. First of all, what is Forex? Forex is a foreign exchange. It is the global marketplace where one country's currency is traded for another, like swapping US dollars for euros or British pound. It has a 7.5 million traded volume. It is 24 by 5 open Monday to Friday. It is weekly off and anyone can trade. Retail traders are welcome over here. We will understand first currency pairs. Okay. Euro. Base currency. First of all, what is euro? It is the currency of Europe and USD. Obviously, you know it is the currency of the United States. Let's now start with the video. If euro or USD is equal to 1.10, you need $1.10 to buy 1 euro. Okay, that's the ratio. Okay, measures, types, examples, what it means. All detail we will show the what are the factors, what are the major concepts. Type major Euro, USD, GBP means Great Britain pound, USD, USD, JPY. Most traded, low fees, easy to trade. These are the easiest way, or most of the traders prefer these pairs. Minors Euro, GBP, AUD, Australian dollar, and New Zealand dollar. Slightly less traded. Exotics USD, TRY, and Euro, ZAR. Risky, big moves, higher cost. How Forex trading works. Buy, go long, sell, go short. You think that it is simple? Pardon. So, what are currency pairs? Okay, we will understand what are currency pairs. First, euro. Euro is the currency of Europe, which is denoted by euro. And USD, you already know that it is a US dollar, the currency of United States. For example, if euro USD is equal to 1.10, you need $1.10 to buy a 1 euro. Okay. So we will learn what are the major pairs in the Forex type, major types. Euro USD, GBP USD. GBP means Great Britain pound and USD JPI. JPY means Japan yen it is. So it is most traded currencies. The most trader prefer that currency exchange for trading. Then minors, Euro GBP and AUD NZ. It is Australian dollar and New Zealand dollar. So like slightly less traded and exotics, USD TRY, Euro ZAR. Risky, big moves, higher costs. So how Forex trading works? So you will be thinking that it is simple. So if the market is going upwards, you will buy. If the market is coming downwards, so you will sell. So it is not totally like that. You think the base currency will rise in value. Example, buy Euro USD. You think Euro will get stronger versus dollar. You think the base currency will fall in value. Example, sell Euro USD. You think Euro will get weaker versus dollar. You make profit when your prediction is correct. Price goes up when you bought is equal to profit goes down when you sold. Is also a problem. So it is not simple like that that the market is in the uptrend, we should buy, it will get profit. It's not totally that. In Indian market, we know that if we are trading in options, so what is over there? Call and put. Call means when we buy, and put means when we sell. So here in forex, there is buy means go long when the market is in the bullish pattern where your setup is ready. When you are planning for buying, then you should buy. And when you think that the market will be bearish, market will come downwards, then you should go for short, which is sell. So we will now go much deeper. what are the basics and the most important thing in the forex. First of all, pips, smallest price move. Example, Euro USD moves from 1.1000, you can see that 1.1000 to 1.1001 is equal to 1 pip. If it goes from 1,000 to 1,002, then it will be counted as 2 pips. Okay. So what is spread? Difference between buy and sell price. This is the broker's fee. Everywhere, wherever you trade on whichever platform you prefer, there's a minimum amount of broker fee. It is mandatory. So what is leverage? Leverage. Trade bigger with less money. If we are trading on the real account, if we are having a less capital, so the traders prefer that. So what is leverage? Leverage is if I will give you an example. If I am having $100, which is mostly less for the forex trading, so what it does, leverage means I am putting my capital of $100 and the broker, they are giving me a leverage that if I am investing $100, then I can trade with 10,000. Means a lot. It may be 0.03, 0.05. It it does not come for $100 completely. It needs more money. So $100. What it is? If I am giving $100, so the broker will give me $10,000, so I can trade bigger. That's the leverage. A lot size standard. Standard is 1 lakh units, minimum is 10 lakh, and micro is 1000. So micro is 0.01. It is denoted as micro lot. 0.1, it is denoted as mini lot, and 1 lot is a standard lot, which most the big traders trade with. So most important thing, the stop loss. Whenever we trade, the stop loss is essential. More than take profit, you should prefer for stop loss because let the stop loss be hit, but we should never lose our capital because if the capital remains, then we can go for tomorrow. So stop loss is most important thing for the every market or wherever you go. Stop loss is most important and profit, that is also second important. So risk management for protecting our money, protecting our capital, protecting our hard-earned money, protecting our savings. The risk management is the core and the most important part of the trading. So first, the 1% rule. Never risk more than 1 to 2% of your account or any single trade. So if example you are trading with $1,000 capital, which is almost 1 lakh in Indian rupees. So whenever you trade, your one trade should only bear 1% loss, which is $10. Okay. So if you are having a capital of $1,000, so you only need to risk 1 to 2%, which is $10 to $20 per trade. Okay. Second, always use stop loss. That is the most important thing. You should always use a stop loss. Set a stop loss on every trade. It protects you from the big losses and from saving your capital. Okay, losing your capital. Okay. Third, risk reward ratio. Okay. Aim for at least 1:2, risk $50 to make $100. I will give you one example. Okay. If you are trading 5 days in a month, okay, Monday to Friday. Okay. First of all, what is 1:2 risk ratio rule? Okay. If I am risking 10 as per my capital, okay, I'm giving you an example as per our capital, okay, $1,000. Our capital is $1,000. What is $1,000 1%? It is $10. Okay. If I am risking 10 to $20 per trade, let's take an example of $20. Okay, 2%. If I am risking my capital of $20, so the target which I need is $40. That means 1:2. If in a week I am bearing three losses, which cost me $60, but two profits, what it is? $80. If I am taking two profitable trades, then also my week is profitable. Okay, what it is, if I am taking three losses, okay, in a 3 days, which cost me $60 as per my risk reward, okay, $20, $20, $20. So it will cost me three losing days will cost me $60. If then I take two targets, which is of 40-40, which cost $80. So still I am $20 profitable. Why? Because of my 1:2 ratio. So everyone should maintain that ratio. Everyone should protect their capital. And as per the capital, they should start their trading and risk the 1 to 2%. No one should risk more than 2% of their capital. Okay. Capital is the most important thing. It's your life savings. It may be anything. Okay. Four, don't overtrade. Yes. It is also a most important factor. Quality over quantity. Wait for the right setup. No random trades. First of all, no trade is also a profit. If the trade is not matching your setup, if the trade you haven't got the trade, it is also profit. No loss is a profit. Not losing our capital is also a profit. Okay. Don't always revenge trade. If I prefer one trade, one day. Okay. If I have got my stop loss of $20 today, so my next trade will be tomorrow. Why? Not because I am sure that yes, I will be sure that I will get it is 50-50 probability. Okay. That next trade, if I am bearing $20 loss, so that my next trade will also get a profit. It's not like that. If I am losing 20 and again I entered a trade, that also hit the stop loss. So it will happen? What it happened? I reached my 4% of the capital. Okay, so don't do like that. Three I it's my quote, 365 days, 365 opportunities. Okay, step 5. Keep a trading journal. Write down every trade, review your wins and losses. Okay. Always calculate our win ratio. Okay. Forex trading sessions. The Forex market is divided usually in the four sessions. First, Sydney session, which is at the 10 p.m. to 7 a.m. And the second, Tokyo session, which is 12 a.m. to 9 a.m. So, and the third is London session, which is 8 a.m. to 5 p.m. And last one, New York, which is 1 p.m. to 10 p.m. Uh, let, uh, let, let me tell you, in Indian time, it works as Sydney, it's almost 3:30 a.m. to 12:30 p.m. The Tokyo session is 5:30 a.m. to 2:30 a.m. and the London session is 12:30 p.m. to 9:30 p.m. and New York session is 5:30 p.m. to 2:30 p.m. At 6:30 the market overlap the London New York session. So at that time the market is usually volatile. So Sydney session is normally it has low volume, so it is not that much volatile and it is good for the beginner traders, those who are risking their less capital and they can hold a trade for long. Tokyo session is also for medium beginners level. London and New York. Specific New York session is more much volatile. It has good volume. So it is good for trading, but for experienced trader it is good. So how to start it step by step. If you are a beginner, I will prefer for 6 to 7 months or minimum 1 year. Don't go for a real account. Don't lose your capital. Okay, first learn the basics. Study the forex fundamental, currency pairs, pips, leverages. I am live every day on YouTube for daily lessons. Just go and watch my live. I am available. Message me anytime. Open a second step, then open a demo account. Practice with virtual money. Most brokers offer free demo accounts, no real risk. Choose a broker. Pick a regulated broker. I prefer MetaFi, MTFi, TradeLocker. Those are best trading platform for demo users. Okay. Fourth, build a strategy. Do back testing. Learn strategies. Learn different strategies, but stick on one strategy. Don't mix up. Don't make a jumbling. Don't get confused. Learn everything and just make a one strategy perfect. and you will master everything. Step 5, start small and real. Deposit a small amount you can afford to lose. To stick to a plan and manage risk. Yes, first of all, deposit a small amount. Whenever you start something, invest your minimum as least amount so you can afford to lose. Stick to a plan and manage risk. Risk management is the most important thing for the traders. So mistakes beginners make. Okay, first of all, what do traders beginners do? They take the entry in panic situation and they don't keep stop loss. If the market is volatile, then if you are not keeping the stop loss, right, the first and most important mistake you are doing. So always set a stop loss every single trade. Okay, maybe it's more pips or less pips, but it is compulsory to keep a stop loss. Revenge trading. I told you, totally, I am totally against the revenge trading. Everyone is against the revenge trading. I personally prefer one trade, one day, one trade. Okay. So lost a trade, step away. Don't trade emotionally. Think practically. If you are 100% sure, then only you can take a second trade in a day. Too much leverage, start with low leverage, 1 is to 10 or less. It's not free money. Okay. It is a high chance of losing your capital. Skipping demo practice. Practice for 3 to 6 months on demo before going live. I told you that practice, make a clear setup, make your vision clear. Choose one strategy, work on it, do back testing, do everything. Then you can go on the live account. Chasing the market. Wait for your setup. Missing a trade is fine. Forcing it is not. I told you, no trade, no loss is also a profit. No trading plan. Define your rules, entry, exit, risk, stick to them always. Don't always get panicked that I will take trade here. If the trade is whichever trade you are executing, that should match your setup. Okay. So, however, this was my first video. If something I said wrong, so please adjust me. My motive is clear that every beginner should learn trading from a small account and just first of all, you are a beginner trader. Don't use real money for 1 year, nearly 1 year. If you are experienced, then only you can go for a real account. First, if you are learning for 3 months, 4 months, and you think that yes, I am capable of trading now. So you can use prop firms. There are many prop firms, but don't take an instant account. Take a evaluation phase, pass that account, master every account, and then you can start with your real account. So here the video. If anything that I have told is capable of changing your life and changing your decision making. So please like, subscribe, and share the video. And I am live every day, Monday to Friday, at the New York station. So please attend the live. You can learn many things from that. So thank you. See you again.